I think we have a great conversation today. I've got a topic for you. You might not be expecting it. They're putting Bitcoin in 401k plans. Can you believe it?
I can't believe it. Especially as we see the rocketing markets and the rocketing Bitcoin.
Mm-hmm.
You think people are really going to be comfortable with that?
Well, I think that should be the topic for the day. Is Bitcoin or just cryptocurrency in general appropriate for retirement-based accounts? So, is it appropriate to have that volatile of an instrument in your account? And I think maybe the first place some people will go is to say that, well, it's unregulated. So how do we really understand its value, or how can we trust it being in there? Fidelity, the record keeper that's going to be offering the ability to put cryptocurrency in their 401k plans in the form of Bitcoin in a separate account, they're trying to make it as safe as possible, I guess you could say, without you investing directly in the instrument. But does that really resolve the issue of, is this, again, an appropriate investment in a 401k plan?
So my response would be no.
Okay.
And my response would be no, because if a record keeper allowed you to make a high risk investment, but they limited participants in the amount that they could put in that investment, I'd be all for it.
Mm-hmm.
But since most record keepers, once you add a fund to the plan, you can put 100% of your account balance in that fund. With that problem, you're now opening the door that they can put 100% of their value in a high risk, off the charts, unregulated commodity, which I'm not sure is suitable for a 401k participant. It might be suitable for a aged retirement plan participant that wants to take on, has a pot set aside, and he wants, just like a large endowment, they might want to risk certain things in hedge funds and those type of things, but they do it for very small percentages of their portfolio.
Yeah.
And without that limitation on the record keeping side, I would caution against it.
Yeah, I think that's a good point, because just as we experience right now, markets are very volatile, things aren't going well. Lots of people are trying to find security, and so whether that's in the form of more conservative investments like your maybe your bonds or your stable value funds in the portfolio, some people are just moving or attempting to move straight into cash or into money market. Well, they're allowed to move 100% of their assets into those funds when they feel it's appropriate. Now, certain types of accounts, especially like when you have a fixed account with a guaranteed rate of return on there might be greater restrictions in terms of being able to pull money in and out of them depending on the contract. But with the Bitcoin, that is the biggest thing that worries me, is that I don't think there's inherently anything wrong with offering alternative investment opportunities, but it is the point that when we talk to our clients about whether or not they have cryptocurrency as part of their net worth, that we only really expect them to have maybe a couple percentage point in net worth in cryptocurrency, as opposed to having 20%, or for majority of Americans, their 401k assets, with 100% of it being available to the cryptocurrency. Again, is that the most appropriate vehicle for that? If they have, even 10 years ago, or if it's 40 years from retirement, how might that work with there? And plus, you've got the issues of plan sponsors wanting to assuage their participants in the plan to offer alternative investments. I'm sure you've had the conversation with plan sponsors and participants on offering Bitcoin and whether or not it's suitable. And then are we doing our fiduciary duty by at least addressing them, and we have a reason for offering them, or should we just avoid the conversation altogether?
Yeah, and again, for plan sponsors that want to offer it, you could offer it through a self-directed brokerage window, and you could also put the restriction in that 5%, 10%, some small amount of their account balance can go into that self-directed brokerage account. Then I think it can make sense. You've opened the door for the person and they can accommodate it. Just like anything else, employers, especially in today's environment, if an employee asks for something or a plan participant asks for something, they want to see if it can be done, but they do have to, gauge, is this something that is something that could benefit, or is this something that over the long term, employees can shoot themselves in the foot with it? And that's what we need to be watching out for.
So if I'm a plan sponsor, I'm offering a 401k plan or a retirement plan for my employees, and I have an employee that comes to me and asks, hey, why don't we entertain Bitcoin? What do you think is the best argument for offering it, and maybe the best argument against putting it in the 401k?
The best argument against would be, these are retirement savings assets, and while you have a long-term time to save for them, there are other investments that have the same amount of long-term returns that might not have the same risk and are in these unregulated markets like cryptocurrency. So you could have investments in international equity growth securities or large cap growth securities, get that same return maybe over a longer term, but not having that same risk associated with them that you have with commodities. So that would be the first answer.
Yeah. So why we would not want to do it? So in the case of what when a plan sponsor looks at it and says hey, this is something that we want to entertain, what do you think what do you think a plan sponsor is probably directing either back to the advisor or the record keeper to say, hey, this is something that we're interested in? Why do you think plan sponsors might be interested in offering cryptocurrency?
I hate to segment employers, but I think if it's a technology-based company, they might have a better understanding, their employees might have a better understanding of, these cryptocurrency and the, how it works and that type of thing. So I think technology companies might have employees that would be sophisticated enough to understand investing some of the assets in there. But I would strongly suggest that they first offer it through a self-directed brokerage account, or even for folks that want to open the door to, again, in-service withdrawals, which are typically available after age 65 or at 59 and a half. You can make those available, and they could do it within their IRA if their IRA custodian would allow something like that.
Right. And Fidelity, again, is currently the only record keeper that is talking about adding cryptocurrency, and it's not even until later this year. So many plan sponsors, as they go through the year and they go through their audits for 2021, they can start to consider that as they talk to their advisors as to whether or not this is an appropriate option for them, or if their record keeper is even going to entertain offering them in the future. So it's a brave new world we're entering into, John. I don't know what else is next. We can maybe buy pork futures or or orange juice futures or something like that.
There will always be something.
Yeah, great topic.
Thank you.